Welcome to TradeTheNBI.com. This is John's reports for the 28th. Oh, what a shock. Turnaround takes place and puts us right back above. And again, this was that DOC steel reset we could see taking place. So while there were soft readings, but there was a critical rejection here from the magenta to the shorts. And we knew that this was just a short trap. I mean, we filled the positive extremes. That was the extent of what it was. It got carried a little bit further. People started adding in short, and that was a perfect opportunity to squeeze them. And my suggestion was, like, even for the Nasdaq, that it would push you back up towards the highs. Could have done a little bit more. So this was modest. I wouldn't call it stellar. It could have been a lot stronger in there, but it may need a little more time. And particularly as the new month begins, you'd have new fund money coming in. That would be the impetus to be able to continue to push it. Of course, Treasury moving lower here because yield rising. Just because people jumped into them and lowered the rate doesn't mean that it was sustainable, as we talked about before. The fool's errand. But oil continuing its dive slightly below 68 range, which is below our 23%. That's, again, a positive. And I think that's what, even some of the Fed governors pointed it out when their discussion about rates and whether they need to move any further or should just pause. Because without this pressure, you shouldn't see the level of inflationary pressure unless it's extended into wages, and that becomes a critical one, whether or not employment is picking up and or remaining stagnant. If it remains stagnant, then you're not going to have the wage pressure, and you take out wage pressure and commodities, and pretty much you can solve inflation. I mean, it's just not really brain surgery for the most part. The problem becomes when you keep printing money like water, you throw off asset classes that become bubbled. So that's expected. Euro still in a ridiculous place, but it is what it is, and Pink Bar's spot on with it. Gold continuing its slight decline because, again, there really isn't any major world upset that's justifying any kind of fleeing of currencies, and most of the traction now has been towards crypto, which has seen the big run up because you can see large players putting money towards it, and it just becomes one of those where you just following the crowd in this particular cases. And interesting from an ETH standpoint, though, much softer from that NBI white pickup. That means likely not to expect 50% support there to hold when you get that kind of spike. The question now becomes, how deep pullback does that? They've got a couple of positive extremes taking down to just below the 38% from an ETH standpoint. From a 50K, caught it really nice from the bottom there, the NBI dip. We knew that we had pretty decent move down lower. It wasn't until we got that beginning of the day when we were doing the video report yesterday, we talked about that orange dipping below green with the crossover here on the DOC, and that was enough to create the build that just drove things to where they are. So that was a nice, clean, easy run from an intraday standpoint. We saw the build up in pre-market, and then they just jockey back and forth, move it down lower back again, and then it was just from the open straight up, pretty darn clean. And then we've just kind of filled in. There was a few more positive extremes, a little bit lower right down there at the 44.0205 range, which were filled in here later on in the post market, and we're seeing the return back up. So all clean numerically, and everything else is pretty straightforward. Looking good. As always, though, if anything new pops up, I will certainly put on the Skype chat. Trade well. We'll talk in later.